Good afternoon, everyone. This is Christian with PerfectStockAlert.com, a 100% free service for smart investors and traders. All we ask in return, please refer a friend. Today is Tuesday, August the 20th, 2013. We're going to look at a few different market charts today, all in the U.S., and I'm going to be trying to show you guys a pattern it's setting up. Let me be pretty clear. Starting off with the NASDAQ, I would not buy this in any way, shape, or form, not even contemplating it. I'll show you where I would be buying, but not here. This chart is very, very dangerous. In this particular scenario, what I want to show you here is this sell signal right here. You'll see that on the Dow today, and then this one as well here. These two sell signals have something in common. They both occur at this point in time when you have the ultimate oscillator down below the 30 line, which is the oversold condition. So typically, whenever your sell signal develops at that point in stage, you have what follows here, and that's just a bounce. So we'll talk about this again later, but right now it's just a sell signal that I wouldn't look for that as being, okay, now we're going to break down and continue to move lower. In most cases, that doesn't happen. In most cases, what happens is you get the sell signal at the low, and then you'll bounce off of that. You'll get another sell signal at a future point in time, and you'll take that one as the sell side. So that's something that's happening here in the U.S. markets, so I wanted to bring it to your attention. You also have a gap above you, which would call for a bounce again, and so forth and so on. There's various different things that would tell you to look for that bounce. However, this chart I can't buy, and I talked about this before. When you have this point here, you got the ultimate oscillator hits the 90 line. That is extreme momentum to the upside there. Whenever you have that, anything that follows after you hit that rally point and you get that signal, any rally that happens thereafter is going to be a bearish divergence, where this high close here versus this high close here is higher, yet the high close between here and here or here or here would all be lower. So it's something that I told you about when it was happening here. It's not sustainable, it's going to fall apart, and that's exactly what happened here. So any rally that we were to see here would just give you another bearish divergence, because you're not going to take out this level up here. So that's why I wouldn't be buying this in any way, shape, or form. This has further to fall to the downside. Okay, here we are looking quickly at the Russell 2000 Small Cap Index. You can see the same basic overall formation here. You got this. Well, let me clean that up. Stupid thing. All right. Okay, what we have here is this sell signal right here, and again you'll notice that we were in the oversold condition when it happened, so the downside is limited before you get that bounce. Okay, so this is the same scenario. If you are short in this scenario, you would have the previous high as being your stop loss limit, the logic being that you have a potential head and shoulders formation. So you've got this move here, the head formation, and then again you could bounce up here and come roughly to the same level as the previous level for the formation of the next shoulder and roll over at that point. And then you would have a neckline that was sloping dramatically to the downside, very bearish, and then once we close below that point, you would say, okay, this is the head and shoulders pattern at the top. We call that distance there. From the bottom, we'd say look for this to test the previous low. That would make sense at that point. But again, that's just some speculation of what might happen. But the main thing is to point out that you had the sell signal off the low point of the ultimate oscillator. It's not a situation where you wouldn't expect a bounce. So anticipate that. It's happening here, and that's why I'm trying to draw your attention to it, show you that pattern. Here we are looking at the SPX, or the S&P 500 Large Cap Index. In this particular situation, you can see the same basic overall thing. Notice there was no sell signal off the high here. Again, that's something to pay attention to. When you don't have sell signals and then they form after a sell-off right here. What happens typically, you'll have a rally like this, what you had back here, and then you rally up here, and you get that signal with the wick out of the top and the small body below it. That's the shooting star. When they form the other way after a sell-off has happened, like this, then it's an inverted hammer, and it's actually calling for a bounce in the other direction. It's still another way to use it for a sell signal in the future, but right now it's something that you should be analyzing and say, okay, yeah, we got the sell signal, but in most cases, and I keep saying that, in most cases, what will happen is you will bounce, get a sell signal, and then go lower. So that's why we're looking for a bounce in a market. Again, pointing out the low point on the ultimate oscillator is lower than you'd seen in the previous, between here and here. So if we look at this low close here versus this low close here, why are we still trending up like that? I talked about this yesterday in the Dow. You can see that this is actually a divergence that calls for a bounce to the upside as well. So again, something to keep in mind. Okay, here we are now looking at the Dow Jones Industrial Average. You can see that today's activity intraday, we had an up day, and then by the close we sold off, gave us again this sell signal. But it also gave us something else, 5 consecutive days to the downside, and the sell signal forms after we have pulled back down below the 30 line on the ultimate oscillator. So again, I'd still be looking for a bounce here. That makes sense to me. Now in some cases they do confirm and just keep pushing and pushing, but in this particular case I would have to point out that in most cases that's not what happens. In most cases they'll simply maybe hit another day to the downside and then bounce in the other direction. So keep an eye out for that. If that bounce forms and you take advantage of that, keep looking for a shooting star like that to form at the top of it, and that would be confirmation, especially if it forms before taking out this high, because that would be confirmation of the breakdown. What we'd have low point, lower low, high point, and lower high, and that would be trending like this, and we would be looking to sell that. Okay, now we'll be looking at the TRAN, the Dow Jones Transportation Average. This one I talked about, I think it was Friday, and told you this is the one where I'd be a buyer of. And the reason for that is that we've had this sell-off, right? And then you get this hammer candlestick formation at the 50-period moving average. And then what followed was an up day, then a down day, and then an up day again. Note the up day here is higher than the previous one. Again, this is just what we call kicking. It's a down day, up day, down day, up day. It happens at tops and bottoms. It's not something that concerns me, and as long as we hold this low point off the hammer, then there's nothing wrong with this. You can actually still be buying this and be looking for a test the previous high. Also point out high point here, higher high here, trends up. The same time period, low point, it trends down. That's conflicting signals. One saying uptrend, one saying downtrend. That just basically means sideways. So we would look for a bounce in this scenario as well. Whenever you're in this condition, when you're moving sideways, you can trade from the bottoms, you can trade from the tops. So be looking for this bounce to go up here and test that previous high. If you fall short, you go up here like done before, high point, low, higher high, low, higher, and then you get this lower high, but it's roughly the same level. Then we'll be forming another Head and Shoulders top right there as well. So it's something to keep an eye on. I'll be continuing. This will be where I'll be looking to buy in the U.S. markets. It'll be the TRAN, because it's got the stronger signal right here with the hammer that the others do not have. If there's anything about today's video that you didn't understand from a technical perspective, you can simply go here to the free website of perfectstockalert.com and go look at the trading school or the technical analysis school, and you can learn everything that I know about it right there in little videos designed to teach you everything that I know. Also, at the bottom of the page, you will find my global market charts. Are updated nightly, and we cover the globe, so you guys can check those out and see the various opportunities that are setting up, and we're taking advantage of there. Okay? God bless, take care, enjoy the evening, and I will see you all mañana. Please take a moment to review our disclaimer. The information provided herein is our opinion only. Under no circumstances do any statements here represent a recommendation to buy or sell securities or make any kind of an investment. You are responsible for your own due diligence. To summarize, we do not provide investment advice, nor do we make any claims or promises that any information here will lead to a profit, loss, or any other result. These videos are for educational purposes only.